Welcome to the Fear and Greed Afternoon Report for Tuesday, the 15th of March, 2022. I'm Michael Thompson. Every afternoon, Australia's most popular business podcast brings you the 5 news items you need to know about today. So let's jump into it. Story number 1 is the local market today. The S&P ASX 200 fell 0.7% to close at 7,097 points. Over the last 5 days, the index is up 1.7%, but down nearly 5% over the last 12 months. Today, it was all about the big-name miners and energy companies dragging the market down. BHP tumbled by 4.2%, and when you are the biggest company on the bourse by a massive margin, that kind of drop is going to weigh heavily. Specialist mining explorer Chalice Mining fell 10%, Fortescue dropped 4.9%, Rio Tinto was also down 3.9%. Supply concerns earlier this month, really in line with the Ukraine crisis, had seen commodity prices like iron ore and coal rise really quite sharply. But as commodity prices now ease back somewhat, so too are the share prices of some of these major miners and energy companies, and that's reflected in today's trading. So by far, though, the best performer today was telco services group Unity, which closed up 27% after a takeover bid from infrastructure investor Morrison & Co. Story number 2 concerns every homeowner's favourite subject, house prices. This is my personal favourite, so it's always going to get a mention today. Australia has officially recorded its strongest growth in housing prices on record, up 23.7% last year. It's quite extraordinary. Great news if you're a homeowner. Not so great if you're not a homeowner or trying to get into the market. The total value of Australia's nearly 11 million homes rose to $9.9 trillion by the end of 2021. The biggest rise was in Hobart, up 29.8%, followed closely by Canberra, up 28.8%. Brisbane was next at almost 28%. Sydney up 26.7% for the year, and Adelaide increased nearly 24%. There was a fairly big gap then to Perth, which rose 15.7% for the year, and Darwin limping along with a mere 13% rise. Doesn't sound so good compared to the rest of them, but in any other year, you would be ecstatic with a 13% rise in 1 year. Growth in house prices outpaced growth in apartments, and Sydney's pricey real estate saw 41% of that total $9.9 trillion asset pool firmly parked in New South Wales. Story number 3 today comes from mining giant Rio Tinto. It has moved to take control of the Oyu Tolgoi project in Mongolia, bidding $3.7 billion for its partner in the coal mine Turquoise Hill. Rio wants to buy the 49% of Toronto-listed Turquoise Hill that it doesn't already own, and if successful, Rio would end up owning 2/3 of the Mongolian copper mine, which is one of the 5 biggest in the world, while the Mongolian government would own the other third. The offer comes 2 months after Rio and the Mongolian government agreed to complete the delayed underground development in the Gobi Desert. I mentioned earlier that Rio's share price was down 3.9% today, obviously another one of the big miners to suffer from falling commodity prices. Story number 4 today, the US Federal Reserve, which is the most important central bank in the world, starts a 2-day meeting tonight, which will result in the Fed lifting interest rates for the first time in 3 years. With prices rising at a nearly 7% pace in the world's largest economy, the Fed knows it needs to get the inflation genie back in the bottle. The question is, though, how fast the Fed can lift interest rates given all the geopolitical uncertainty thanks to the Ukraine war. Certainly Wall Street's expecting a rate rise, with companies more sensitive to higher rates losing ground in recent months. This morning, the tech-heavy Nasdaq fell nearly 2%. Tech and healthcare stocks are 2 of the most affected by changes in interest rates. Finally, story number 5 comes from the land of the long white cloud. While Prime Minister Scott Morrison is debating whether to cut the fuel excise tax in the upcoming budget to relieve some of the pressure on households, the New Zealand government said it will cut fuel taxes by 25 cents a litre and halve public transport fares for the next 3 months. Granted, the fuel excise in New Zealand is a lot higher than it is in Australia, but maybe there's something in that for Canberra. That's it for the afternoon report for Tuesday, the 15th of March, 2022. Don't forget to hit follow on the podcast and find Fear and Greed on LinkedIn, Twitter and Facebook. Join me and Sean Aylmer tomorrow morning for the Wednesday edition of the Fast Five by Fear and Greed. I'm Michael Thompson. Enjoy your evening.